Call the Insurance Committee meeting to order. 3 p.m. Monday the 17th. Take a look at the first item on here. Petitions by citizens on non-agenda items. None. Agenda item number 2, we're going to look at and review health insurance options. So we have attendees, Gretchen and Dan, that are here from MD Health. They were recently brought on board as our brokers. So if you two want to come on up to the front, we've got a couple other people that are scheduled to be here from unions. So we'll make sure we don't go too terribly far.
Okay.
So I want to make sure they get as much information as possible as well.
All right, appreciate it, Gary.
And then also, just do a quick recap. So you all started as brokers, MB Health, beginning November 1st, I believe.
That's correct.
One of the reasons we're having a follow-up meeting is our original health insurance renewal rate for employees came in at over 25%, and we needed to take a look at other options and even go back to our current provider, which is Blue Cross Blue Shield, and look at what they could do to amend. You all have gone back, talked with them, reviewed options, and gotten the increase from over 25% down to 20.5%, which is still an extremely sizable increase. So we've been working with Tricia, and so we also want to make sure that we take a look at what other options we have to provide similar coverage for the employees through our health insurance at a cost that's effective for the city and for employees without really losing coverage, what we're providing. So that's just kind of a quick recap for anybody. Does anybody else have anything else to that? But if you want to go ahead and get started, you can take over. So thank you, Gretchen, and Dan, for being here.
Thank you, Gary. Good afternoon, everyone, and thank you for the opportunity to be here today. My name is Gretchen Hendricks, along with Dan Jung with MD Health Insurance Agency, and we're excited to walk through the upcoming plan year's medical insurance options. Our goal today is to help the city continue high-value, competitive benefits to employees while ensuring long-term cost stability for the city and its members. By the end of today's discussion, we aim to review how the current plan is performing, present the renewal and plan design options for the upcoming year, and discuss cost savings and member experience improvements. But before we consider the future options, it's important to understand where we are today. So going back and reviewing the claims, so keep in mind, a group of your size should run around an 80% loss ratio. A loss ratio is calculated by your overall claims expenses along with your premium. The city is currently running at 115% loss ratio.
15 or 50?
115, 115. In September alone, this jumped 136%. Your total claims for the rolling 12 was 1.5 million versus the prior period for the same time period was 1.1 million, which was roughly a 30% increase overall in claims. And it was mainly driven by medical. There are 15 claims right under the $50,000 mark that could potentially, based on diagnosis, and all of this goes into the renewals while I'm explaining all of these details, but that could go either way on diagnosis, whether they're going to be, they could go into the large group bucket or they could, stay under the 50,000. So just keep that in mind as well. When your renewal was released at the 25.3%, you had 4 large claims that were released along with that. With claims through September, now you have 6 large claims on the books. So all active and ongoing. So that's pretty important as well. I do want to point out that in reviewing your claims, your generics usage it's wonderful how the city is really being good consumers. Your members are really taking care of, making sure they get most cost effective. Your generics, I just want to point this out because this is wonderful. You had 2,500 generic scripts with only $34,000 in dollars, and 352 brand name drugs at $368,000. So that is huge, and so much money to save just by using those generics. Also, the city is going in network. So your network usage is 99.5%. So that's wonderful as well. Staying in network is very important because it saves not only the city dollars, but it also saves the members money because they're not going out of network. Your renewal is comprised of 3 components. You have the account trend and benefits, your demographics, and then underwriting pricing adjustment. Based on these factors of current claims performance and carrier projections, we are looking at an estimated renewal change of 20%. So I say 20%. I know the spreadsheet shows 20.5, but if you were to keep the life with the medical under Blue Cross, that does go down to 20%. So that's why I'm voting 20% from the initial proposed of 25.3%. They have reduced the overall renewal by 5.3% due to the longevity of the city being with them. So now let's dive into those options and see how we can mitigate that impact through plan adjustments and cost saving adjustments. So the first option, and I'm on the first page of the spreadsheet provided, is Blue Cross. You can see in the first column, you have the current plan and then the renewal plan. That one represents the 20% renewal. And the current plan is a $3,400, $6,800 out of pocket and deductible with an out of pocket matching the deductible. So the plan pays at 100%. So we can maintain the current plan at the 20% and make a change to the overall HRA vendor for 1/1. This offers minimal disruption. The second plan under Blue Cross is to increase the overall deductible to $4,000. And that offers rate relief based on the benefit change. There would be...
Sorry, I didn't mean to, I'm going to throw off the flow a little bit, but with Steve and Scott just joining us, could we start again at just once you get to this spreadsheet?
Sure.
That way we're kind of on the same page.
Yep.
So Steve and Scott kind of went through a little bit of a recap on where we're at for the current year, current spending levels.
With Blue Cross Blue Shield?
Correct. And we can get you that information if you need it, but now we're just really kind of starting on these options. So I just want to make sure we're not that far and we can start make sure that is
And I just wanted to let you guys know that this is being recorded, so if you want to watch back later on, you'll have that opportunity to recap that first 5-10 minutes. So, sorry, go ahead.
Okay. Okay, so the first page on the spreadsheet is the Blue Cross plans. Option A under Blue Cross, maintain the current plan at the 20%. Make a change to a new HRA vendor for 1/1. This offers minimal disruption and no significant onboarding and education, even though we would do open enrollment meetings. There's a new vendor being proposed if we do stick with Blue Cross. It's called Envision. They do have a direct claims feed from the carrier as long as a direct feed, and that pays providers. So keep that in mind. It's also listed on the spreadsheet. The next plan, option B, is to stay with Blue Cross with an increased deductible of $4,000 for individual, $8,000 for family. This option offers rate relief based on those benefit changes. There would be a higher out-of-pocket cost for the city under the HRA if this plan was chosen. This option represents a 13.9% increase from current rates. On the second page is our Aetna option. And this plan offers a $3,250 deductible for an individual and $6,500 for family. This plan also has copays associated, so after the deductible is met, the member would have copays at the pharmacy and ER up to the total out-of-pocket of $7,500 for an individual and $15,000 for family. Keep in mind as well, this plan, since they have copays and a higher out-of-pocket, there is potentially higher out-of-pocket cost under that HRA. Under Aetna, they have an integrated HRA vendor through Inspira, which is listed on the spreadsheet, saving approximately $5,600 in admin fees since there are no admin fees under that plan. This is an integrated HRA, so they do get a claims feed. However, the member is paid by either direct deposit or a check, and they're responsible for paying those providers. Aetna is offering a credit for new clients, $400 per enrolled employee to be applied to the second month's invoice, totaling $26,800 if you were to go with the Aetna plan. The third page is our United Healthcare options.
I'm sorry, real quick, what was the increase on the Aetna plan?
That is 6.5%. And it's actually listed at the bottom of that column as well.
But the payroll would be down, correct? Looks like the deduction compared to if you kept with the existing Blue Cross, it would be less. Am I reading that right?
Correct, yes.
Correct. So you guys would get less out of your paycheck.
With the Aetna plan as well, it stays the same as 500 and 1,000?
Yeah, that doesn't change. That's constant with all the plans.
Okay. Even though the
Out of pocket.
copay out of pocket, so whatever
The out of
technically.
pocket, yeah, the out of pocket is higher, but the additional amount will go into that HRA.
Correct.
So that is the potential out of pocket cost that the city would have to take on under the HRA.
Okay.
The last two options under United Healthcare is option A on the third page at a $3,400, just like you're used to today, and a $1,600 family deductible. This plan has co-pays as well that will apply after the deductible has been met, up to the total out of pocket of $6,250. So just like that Aetna plan that we just discussed, this one also has a higher out of pocket. The co-pays apply to that out of pocket until that out of pocket is reached. Again, this is a higher out of pocket cost for the city under the HRA. This plan represents a negative 4.6% change, so that's under current rates. The last plan that we are going to propose today is a United Healthcare plan exactly like you're used to today at the $3,400 deductible for individual, $6,800 for a family. This plan pays at 100%. This plan pays at 100%. And it's exactly like the one you're used to today. United Healthcare is also offering an implementation credit of $20,000, and that would be paid on the third month's invoice. I do want to mention with United Healthcare, the HRA vendor would need to be Paylocity. They do not have any integrated solution with United Healthcare. With Paylocity, the member would need to submit their EOBs themselves for reimbursement. And they can do that through the member portal, they can do that through the mobile app, or send in a claims form.
Either of these two?
Either of those plans, yes. The basic life and dependent life, the Delta Dental, Dental, and the iMed Vision are all staying the same with no changes to those plans. So in closing, we take seriously the city's role in delivering high quality benefits while being mindful of your overall bottom dollar for the city. It is important to support the employees who serve this community every day. We appreciate your trust and look forward to continuing the support of the city. Thank you again for the opportunity to partner with the City of Waterville.
A lot to take in.
Lots to take in, yes it
And
is.
look at. Lots of good options. Couple questions. Looking at United Healthcare, what does that overlap look like between a existing Blue Cross Blue Shield network that the employees are used to and their network?
So United Healthcare network is much like Blue Cross's. Honestly, I don't see a whole big difference. We can run a disruption and or provider access report for you to show any type of differences. But I don't expect, all of the plans have been quoted with the largest networks. I did run a provider access report for Aetna, and it showed all the major hospitals, including Redbud, Belleville, Highland, all the major hospitals, even close to here. So, and I don't expect United Healthcare to be any different, because it's the largest network.
And that would extend into St. Louis with BC.
That's correct, yes, yes.
The Paylocity portion of United Healthcare, that would be, seems like one of the bigger changes. How would that work? What would that look like for an employee if that is the option that we move forward with?
So the member would go to the provider's office at the time of service. They would use their United Healthcare card. Once they get that EOB from that service, they would submit that through the member portal or through the mobile app, or the portal, or a claims form to Paylocity for those HRA dollars to be paid out.
Do we get that EOB through the mail, or will there be an app that you could just do it
You can
the
get
next day, like quickly, or do you have to wait?
Typically, you
Till
can
you
just
get
go
a paper
on.
copy.
You can just go on the member portal and pull down those EOBs.
So I had United Healthcare before I came here, and their the member portal is very, very similar to the Blue Cross Blue Shield portal. It's where you go in, select a member. You could select providers to pull up the EOBs. You could just pull up all of the EOBs by member. It was no different than what Blue Cross Blue Shield was, and I think it all kind of depends on the provider, how they bill too, when it's available.
I've been here long enough that I've had all of these, and every year, it just you just have to stay up on it. They've all gotten quite a bit different since the last. Hell, that I think was GHP last time we were with them. So, things have changed for sure. But I do wonder. When you look at like raw numbers, our guys will just want us to tell them, oh, hey, that negative 4.6, like that sounds awesome. What should we be leery about with that plan? I know you had mentioned after deductible, 0% co-insurance on the one to the right. This one looks like there's some costs associated with that. We see that. How do we see that on our end? Because I know you still said that $500 is in play, correct? And then anything after that is covered, or no, not on that.
Your total out of pocket is $500.
Yeah, the 500, 1,000.
Right. So anything over that, then the city picks up under the HRA.
But if it's a
So is there a
copay,
reason?
you usually have to pay it when you go to the doctor.
That's correct.
So you would have to pay it, and
Yeah.
then you would have to wait to get reimbursed from the HRA.
Correct.
But with the current plan or the last plan, there wouldn't be a copay later, so you would.
And even with
So guys will just see more out of pocket initially. Even once that $500 is hit, we're still hitting those copays until we get to that $3,400 or whatever for an individual, or
That is
or
correct.
$6,800 family.
up to the out of pocket, total out of pocket. You pay copays up to $6,250. So that's
And you'll actually only have the copay after you've reached the deductible on
correct.
that plan. So once you've reached so let's just say an individual, once they hit $3,400, you would not have a copay before then. But if you hit that $3,400, then you're going to have a copay when you go to the doctor or urgent care or ER or pick up prescriptions.
And I also wanted to mention too, because Gary asked about the Paylocity. So you're going to go to the doctor's office and you're going to pay that copay, right? But Paylocity is going to pay you, and you're going to pay the provider. So essentially, you're going to have to pay the copay, and then you'll get your money back once that.
Once you're over your deductible.
Correct.
Right. Once you're over the deductible is when the copays would apply, correct? Up to the total
So
out of pocket.
let me ask you this: so for the first 500 or 1,000, whatever one you fit into, are you still going to have to submit all those EOBs? Because I have to pay my provider. I'm responsible for the first 500. So if I go to the doctor, it's $150. do I need to worry about submitting
I would
that
submit
claim?
that EOB so they can keep a tally of
So
your first
I have to
500.
submit all of them
Yes.
from the start.
Yes. That way they'll know once you reach your 500 and they'll start
Right.
saying, hey, yeah.
So is there what's the on the United Healthcare one? What's the reason for the out of network deductible doubling?
That's their plan and how they rated the plan. It's just a specific plan. It's not really,
I mean, was it a way to save money on the overall plan or what?
for out of network.
Yeah.
It could be.
Well, I mean, you said
But-
earlier that we were 99% going to in-network providers. So
Right,
did the city
99.5.
take a risk on us not going to an out-of-network provider and
Oh, no.
and
No.
upping that deductible to save money? Was that
Yeah,
a way to?
absolutely not. No,
Okay.
the city had nothing to do with that.
I
That was
didn't
just
know if
their
that was like
share.
a,
Yeah.
hey, we'll take the risk here if you guys are
No.
willing to,
Yeah.
No, that's so those when out of network, those are like just fixed numbers in these plan design strings. Like a string design is going to have specific out of network coverage, and they're just higher. One of that is to try to also say, hey, look, you're going to have your best benefit in network, so they're looking to try to get you to stay in that in network scenario.
Say a person has a surgery set up for December. They go in, have that done under Blue Cross Blue Shield. What happens Jan 1 when you need to go to your first follow-up or whatever? All of that stays the same in-network doctor, all that's good to go? Like, we don't have to worry about that transition other than just repaying at January 1 so you hit your $500?
Very true. Now, I would also say to you that as soon as you get your new card information, your new provider information to the carrier or to the provider, the better that is to make sure that everything is getting transferred properly. Because most of the time they're going to call to continue to verify benefits, make sure everything is still authorized and on file. Because that really falls on a network provider to be doing that for us as
And
well.
if we have questions at that point, you guys are the ones we call, or we call Paylocity, or like who catches the walkthrough? I get to try to.
You can call us.
Okay.
Yeah.
So, really, the only difference between these United ones is one you paid a copay after you hit your deductible, and the other one you don't.
Correct.
Now there'll be
And a higher out of pocket.
correct. So you'll have some additional deductible to meet. So after that $500, you're still going to that $3,400 per se in terms of your out of pocket, and then that's when the copays will kick in. So you'd still have like what Tricia was mentioning earlier. Let's say I have a sick visit. On average, a sick visit maybe runs $150. Okay, and then it's going to run to the provider and make it discounted, 50%. So now let's say it's $75. So normally that $75 is going toward your deductible until you meet that amount, and then the copay kicks in. So you may get to your $500, but you still have that same $75 cost until the $3,400 gets met total. So you might have a higher out-of-pocket amount to pay until $3,400. That copay won't kick in on that first option until $3,400 is met.
Right.
So the copay isn't immediately at $500. The copay kicks in after $3,400. So you'll have a little higher than that. For instance, the $35 copay for a little while until it drops down for you.
But you'll still have the HRA.
The HRA is going to be picking that up because you'll then be submitting that in. I just want to make sure you're understanding that once you hit $500, the $35 copay doesn't start, but you're still going to be getting reimbursed for whatever that amount is up to that discount from the HRA.
Let's say we have prescriptions set up on like 3-month auto sends or whatever. We're fairly confident this will all stay the same as far as just being able to go through that same like Express Scripts or whoever Blue Cross has us use now, or just cross that bridge when you get there with the provider and wherever they say to go, change everything. I mean,
So if there
that's
is,
always the nightmare of changing plans is how do you
Right.
continue the service that you have.
Correct. You will have to get a new script to make sure that you get that set up through the pharmacy vendor with the new carrier. So if you guys do make a plan change, all of that will need to be updated.
But likely Express Scripts do use UHC, do they?
You know, I honestly I don't recall.
Okay.
I have to look that up.
Yeah, we'd have to, I don't know off the top of my head who their mail order vendor is.
Yeah.
Not,
Okay.
you know, but yes. So with that said, all those capabilities, the mail order is still there. Okay,
Right.
it's just a matter of getting the script to the, you know, from the provider. If you see somebody, they just resend it to the correct.
Right.
Because yeah, for me, I mean that's where my insulin comes from. So I just do a 3-month supply. It shows up to the house and pay for 2 months, and it's cheaper to do it through 3 months at a time as just going to Walgreens and filling it. But I was just wondering if that is still the case. Like, do we know who we're going to use, and we'll cross that bridge?
The Google machine says Optum, Steve.
Yeah, that's correct.
Yeah.
It's a lot to take in at one time. Any other questions? You guys
Do
have?
you guys have a preference?
I do.
Ease of
We-
transfer? Like, what are your thoughts?
I mean, my thoughts are United Healthcare plan, the option 5. It's the same plan you're used to today. While you'd have to switch, you know, the HRA vendor as well to Paylocity, and the member would need to submit EOBs and pay those providers. I think it's a no-brainer at 6% with the same plan that everyone's used to today.
And 6% falls where market wise? I mean, that's about average, or is that decent? I mean, obviously Blue Cross Blue Shield came in at 25, then 20. But I mean, where does 6% fall on?
6% is a very good renewal.
Very good rate.
Yeah, very good. I mean,
Yeah.
typically, I've been seeing 18 to 22%.
Also based on our experience.
Right.
Correct.
Right.
They may have missed the portion of what our experience is, our current experience is, so you might want to reshare that with them.
Yeah, they came in after this. Yeah, so the experience, it definitely was probably the biggest factor. When Gretchen was going back and forth with Blue Cross of Illinois, they just couldn't go any farther based off of where our experience was headed. I mean, we had quite a few back and forth with them on where things were at. We had sent them some competitive data as well, and they even had some most recent September activity that they just weren't willing to go down any lower for us because of it, in terms of where they saw it going.
So it was usage and them saying that over the past few years we hadn't had rate increases, so it was our turn, not theirs.
I
Or
mean,
is it not-
that's a pretty fair way of saying it. I think so. Yes, I do.
So, the last time we met, you thought possibly we
Yeah.
could get down to 10. Is that kind of essentially what we're talking about here?
But the last time we met, I said hopefully 7 to 8% off
Right.
Correct.
of the 25%.
Right, okay.
I think at that point we were talking about if we could get it down to 13, 14, 16.
Right. And that's what you're saying, they just weren't willing to.
No, they were not. They were not. And that's why when I would say to you the United Healthcare data was pretty, I mean, for them not to want to do it, I was kind of, we were both kind of surprised that they didn't want to come off it, especially when we had a United Healthcare plan very similar, if not identical, kind of to your current benefit structure that was coming in real close to your where your current rate would be in terms of cost. So I thought that was going to be pretty persuasive. They did not want to budge on it. And so for the key things that we would be looking at is it's really that HRA experience. And some of that is working together as we go through that process. Is it going to be some learning curve there? I certainly think there will be some learning curve there. But I think it'd be worth seeing how that goes and knowing that you're not, folks aren't learning it on their own. If there's a problem or an issue, we've got the ear of Paylocity at the same time as ourselves to kind of help people walk through that and hand in hand with you guys to make sure that it's not, that we're doing it the right way, especially in the beginning for the education.
Excuse me.
Yes,
You
sir.
said earlier there was 6 claims, if I wrote this down, active and ongoing, and that's what Blue Cross Blue Shield is looking at?
Correct.
And so they're concerned where those claims are going to go, correct? Is that the way I took that?
So,
They think there could be some major,
we have 6 large claims on the books today.
Okay.
There is a bucket, if you will, right underneath the $50,000 large claimant threshold, that could go either way. So they're like, we have all of these claims sitting here. We have 2 new large claims that just hit in the month of September, so now we have 6, and we potentially have more that could come on, but may not. So that's what they're rating for. They're rating for that risk of the potential.
so that's why they're keeping that rate higher. Because they're paying the insurance.
They're rating for the risk.
If tho-
Yeah.
If those claims exceed the 50,000 category, it's actually cheaper for us, correct? Because it goes into a larger category, as opposed to all stays with the current carrier.
If it goes over the threshold of
Yes.
$50,000, it's going to then be a large claimant. So that's not a good thing.
That isn't like the insurance.
Yes, up to a certain amount, but still, I mean, it's still your claims experience. So it's still something that the underwriter looks at based on your group and where your group is headed. And I don't have those dollar amounts right here in front of me, but yeah.
But Aetna and UHC know this information too.
Uh-huh.
That's correct.
They do.
Yes.
So, yeah.
Yeah, when you look at them, I mean, really, UHC gave us 2 really good options to decide.
Right. Absolutely.
That's certainly where we were leaning, at least in what we would, potentially for the next round.
Yeah.
When you say they mean option 5?
Option 2 or option 5.
Option 2 or 5, okay.
Yeah. Which is both United Healthcare options.
Sure.
It's just really hard to know what the ultimate cost of option 2 would be because,
Correct.
there is that out-of-pocket maximum, which we didn't have before. It could benefit us. It could not. Like, we don't know. That's the biggest thing with that one. Whereas the other one, we know the out-of-pocket maximum is $3,400, but it's like, how do you decide?
What did you say the in network percentage was? Like 99 what?
99.5%.
Yeah, very, very little.
Very little out-of-network.
Right.
So what would you? We've got Blue Cross Blue Shield for another 3 months. Do we encourage our members to, hey, if you need something now, go get it?
That's not what I said.
No, that's not what we just talked about. It's 100% coming from me. But why wouldn't our guys at this point
Trust me.
say, hey, you know what? I've been waiting to get my I'm going to see if I can schedule this and get it done. Is that bad advice?
It's not bad advice. However, you are going to have a new deductible in the beginning of the year, whether you go with Blue Cross or whether you go with another carrier.
Steve, you
No, I
said
get
3
that, but
months, but I think the turnover is Jan 1.
Jan 1.
Right.
Yeah. So
So you'd have to get it on the books very quick.
Yeah,
Right.
you have to be in there in December.
No, but I see where you're going. I mean, that claim experience then would all be in the Blue Cross and Blue Shield world, not the claim experience on the new carrier. I do get where that does. I always tell everybody, too, when I meet my out-of-pocket maximum, okay, that's the day to sit down and make that bucket list of all the stuff I need to get done.
Well, I do wonder why. I mean, I get that we're getting penalized by Blue Cross and Blue Shield for usage. But I find it really hard to tell somebody who just had a child or something and they have hit that number for maybe the first time ever working here, not to use it, to use their. Is there a way that you guys can help us bridge that gap or find, educate on when is the time? Because I don't know that I wouldn't tell guys just send it all the time. I mean, why, if you're going to meet your max anyway, like why wouldn't you use your? We're
No, I
telling
totally
people
get it. I
not-
mean,
we don't want to use it, but at the same time, what's the advice we give?
well, one, you go to the doctor, you go to the hospital, you do things that are necessary. I mean, is it, if
I mean, I'm not talking
No,
day jobs.
I
and
totally
stuff,
get it.
Like obviously things that are. But if a guy tears a knee up or something, or thinks, man, I've had this issue and I've just been putting it off. How long do you tell them don't do it, or do you just say, hey, man, this year you finally met your deductible because somebody else in your family got sick, or on that family plan you decide, hey, we're caught up.
So,
Maybe
you
don't
bring up
do
a
it.
point that I dealt with. I had a partial knee replacement in June. Okay, so I met my out of pocket, and there was a part of me that I really I would have loved to have gotten the other one done in the same calendar year. Unfortunately, just I could not, get it scheduled to where it would be too impactful to the work. Unfortunately, so it's going to carry into the next year. But I mean, those are things that really you don't want your quality of life to suffer. Okay, so if it's a scenario where you can potentially take advantage of what you work hard to have available to you, I don't ever tell anybody not to use it in no way, shape, or form.
Because I mean, it seems like this year we're getting penalized for usage. Should we always just be trying not to, or like I don't
Good
know.
consumers is an important thing. All right, being a healthy consumer of health insurance, is important. Is there folks that run out and use the emergency room as an urgent care? They do quite often. Okay, are those scenarios where I'm like, in having more back and forth conversation with employees on, how to use the things that maximize virtual care versus potentially having they go have the office visit or the urgent care. It was a week before, I had a virtual visit one morning, and in 30 minutes I had a prescription for my sinus infection, and I was, getting back to the land of the living. So, but those are things that a lot of people, they don't know how to do it, or they don't have conversations. I really think that's an area in what you're talking about. Maybe we have the ability to have a little bit more impact in the coming year.
Do you guys see companies like ours that have gym membership discount, like trying to get a healthier workforce? Like, does that exist? Is that something that you see a savings in the overall numbers? If
Speaking from experience, my company or past companies offer that stuff and nobody uses it.
it doesn't,
No. They'll send you a scale. They'll give you free online classes. No shit. Sorry. But
And Steve, the other thing I would say too is there's two components to look at. One component is from a financial perspective, how is this going to benefit my family? The larger, maybe even larger component is the doctor. Does he really think it's important? They understand playing that game as well, and they can help with that.
So you said you recommended option 5 for United Healthcare, correct?
That's where I lean, yes.
Okay. And then why not option 2?
Just because it opens up the members for those co-pays and.
But those co-pays only kick in after the $3,400, $6,800, correct?
Correct. $3,400 for an individual, and then you'd have co-pays up to the out-of-pocket amount. So my thought process is you don't have the co-pays to mess with after the $3,400 deductible for option 5, to where you would have co-pays at the doctor's offices. You would have more things to submit for the HRA reimbursement up to the $6,250. That was my thinking.
And I think also, just looking at this today, we haven't had a whole lot of time to look at this either. There's a higher out-of-pocket potential for the city.
right.
Correct.
It
On
puts
that
the city at more risk.
Correct.
It puts the city at more risk, so that's where we like the safety, a little bit more perspective and security on the second one. Certainty, that's what I was looking for.
co-insurance out-of-pocket maximum is the same though on both
Right.
plans, right? The
No.
12,
So
5,
on
or
option,
25.
option
No.
5, yes.
Yep.
Anywhere you see the higher out-of-pocket, the city's going to have a potential higher
But aren't they the same? I mean,
HRA.
what am I missing?
Option
I was
two.
Are you in that
looking
third
at
bit?
these two, like right there and there.
Option 2.
Option
double.
2 has a
That's
higher
why.
out-of-pocket, the
That compared to
$6,250.
that is why that one is cheaper. But
Okay.
the city is more at risk, it's double.
Do you see that? Okay. Now, the other thing I'd say to you as a guy that as we look at benefit strategy long term, okay, option 5 gets us back very similar to where you're at right now, and it potentially builds in us opportunities to make tweaks throughout, even at a next renewal potentially, if we had an increase. So sometimes it's always, if we don't change and we get kind of where we're currently at, well, that higher out of pocket might give us an option to move to even a year from now, or, and get us back down if we had to couple that as well.
needed.
If needed. May not even come to fruition, but.
So this second renewal plan, guys, the option 5, when I calculated that, it would be an extra, like if you had the family, it would be an extra $29.50 a month that you would have to pay.
Which if you stayed with Blue Cross.
So it would be like
we're not talking
$15 extra
about
dollars per pay.
$30
Yeah.
paycheck. Thank you.
And I think what we'd like to do is take a look at this, the recommendation from MB Health, get a recommendation that we can make a motion on, move forward with, because we want to act on this as soon as possible as well, so that we can make sure that insurance is as consistent as possible. There's enough time to transition. If we do move from Blue Cross Blue Shield to United Healthcare next year, give you all as much time as possible to make that happen as smoothly as possible.
Right.
So what about the Aetna? I mean, if you're eating a 6%, Aetna's only 6.5%. Is that a better, friendlier plan?
So
Out of network's the same.
Or no, is it?
the out-of-network is actually higher than the United Healthcare one at $7,500. So you'd actually have
Okay.
those co-pays up to $7,500. Again, potentially raising the out-of-pocket for the city under the HRA.
So no real reason to consider that one and your
It was
guys'
a nice comparison to
Sure.
see, so we could look at it and put them side by side,
Okay.
see where they're at. And that was something Tricia has done with MB Health, is we'd really like to see some options. And so it's not just, here's the one we got, we think it's best. It's, here's the best options. This is really the one we feel like is.
So do you want us to take back to the guys we work with, the 2 United Healthcare plans, and come up with an option, or you want us today to tell you
We'd like to move forward with the option 5
that's the city's recommendation?
So when did you guys get to look this over?
today.
You guys all.
Like, yes,
Good.
this afternoon.
Right, this wasn't emailed to us.
No.
Yeah.
Yep.
No, this was.
And it's not on council tonight, right? I should probably
It
know
is
this.
not on
No.
council tonight, no. It is not.
No,
I didn't think so.
It's not on council for tonight.
So, with that said, Kyle asked, are we looking for a motion? I would like to, but it's not on council tonight. Do we have to have a motion?
You do not.
Okay, my
So-
apologies.
Paylocity occurs with either option 5 or 2.
Correct.
Yes, sir.
And we did, just so you guys know, we did try to look for any option that communicated, but there really aren't any HRA vendors that UHC partners with, just so you know. So that was something that was a concern. We heard from all of you, but we just could not. Like, we've tried and tried, and they don't really necessarily partner with anyone specifically, so we heard you, but that was not something we could. We're trying to save money on the opposite way right now. So.
Trying to decrease the increase.
Yeah. Yes.
The charge higher was the problem previously anyway, right? You guys weren't happy with that. So
Correct.
we're moving away from that regardless.
Yeah.
Yep. Now, with that said, any filings or claims for this year, if it's on December 31st, once January 1st rolls around, it's still on this year's plan. That'll still have to go through Charge Snyder, am I not mistaken?
Correct.
Okay. So you'd have to deal with them for maybe a little bit
Few more months.
once the new year rolls through.
Yeah, there's certain run-out periods.
Right.
I mean, it hasn't been as bad. Like, the initial switchover was miserable, but
So Is this something that you guys feel like you could have conversations, review with them, get any questions
They just
answered?
gonna have to get used to EOBs,
Yeah, can we?
That's the difference.
So, how do you envision us submitting these claims? How do you envision us? Are we getting them by mail?
Yeah, like a portal you keep saying, is that an app or
You
what
can
is
log
it?
on, yeah, you can log on to the United Healthcare member portal
Right.
and pull down the EOBs and then submit them through Paylocity's mobile portal, mobile app, and or they also have a portal, so you can save that EOB to your computer and then submit them straight on their portal or on the,
This sounds so
Member
easy
app.
to you. And for probably everybody in this room, it's going to be that easy. But I just remember the last time there was guys using fax machines and it got a little.
well, we can show you and walk through that during the
Yeah.
education meetings.
I think your first,
Yeah.
I think your first experience with EOBs was actually a very large problem. That you didn't get them, they didn't process them. I think a lot has changed in that.
I
When
had
we
to
first
wait.
started, it was fax machine.
I had to wait till I got a paper copy.
Right.
Then you had to. So basically, you're already a month or two behind paying that damn medical bill because we were told just ignore it until you get it, then you can submit it, and half the time it was already if. Sometimes it seemed like Charles Schneider, or even before them, they would. Who was the one in the middle? God, there was one before them too. VPC or whatever. But they would maybe get ahead of you in the game. So, say you were submitting paper copies of everything. By the time they got there, like, oh, we already took care of that. We already sent that out. It's
Yeah,
like,
we
well,
can
then why the hell did I have to do all of that legwork to get? Like, it was never. Nobody. The right hand didn't know what the left hand was doing ever. And so that's a little nerve-wracking with some of this. Just
That was
wanting
years
to know.
ago. Maybe things have gotten better.
Right.
Like, I don't remember doing that for a long time. So.
And they probably didn't have a member portal that you would have a.
Yeah, I've never even heard of a portal until you guys started talking about it. So.
Or a website.
We'll go through all of that during the education meetings.
There you go.
That's awesome.
Yeah.
If you don't make a recommendation today, you're going to have another meeting next week in order to get this on council on December 1st.
And next week's a short week.
Yeah.
Yeah, I mean,
So I'm not telling you to make a recommendation, but you're going to
Say our.
you're going to have to do it pretty
Is there any way to see a summary of benefits for this?
Oh,
Absolutely.
totally.
Yeah. We can send that over.
I'll give a copy. Do you want it?
I was gonna say we go back. I mean, or what is your thought? Like, are you going back to your guys and saying, tell me which one you're taking, like a
I don't
vote?
think they even know I'm up here.
Hell, we didn't even know we were supposed to be up here. So,
Yeah, you did.
We'll find out like you found out.
well, apparently I have an email address that now you know. If it says City of Waterloo behind it, it does not come to this phone. I mean, it doesn't get used.
Respectfully, you guys you say it's very comparable. I mean, if we get the summary, I kind of know the summary of benefits of what we have now. I mean, I feel like that is probably going to be what I'm going to get asked the most. So
Correct.
if it's as comparable as comparable gets.
Yeah, I don't see any glaring gaps. I really do not.
Yeah.
You know what I mean? And again, we're only looking at the full network option. So we're not really tweaking anything there in terms of, like, I'd be really concerned of all of a sudden weird things where providers aren't taking stuff. That'd be pretty shocking.
I've had UHC before as well, and I've had no issues. And I'm pretty sure I'm with the same doctors now that I was with UHC,
Yeah.
that I went to Blue Cross. And they pretty much are the same. across
They
the
are.
board.
I don't foresee any problems with the network.
Yeah.
This one is
The
this
one
is 5.
that is 5, yes.
Show them the 2 out-of-pocket max months. That'll kind of make sure that.
So this is the copay, which is option 2, and that one's 100%.
While they look at that, what's the earliest next year we could do a renewal? So we're not on such a time crunch. I know we changed to you guys, so that's kind of put us on a time crunch.
Right, and
But-
that's, I think, where the time crunch came in.
Yeah.
But typically, the renewal is released about 90 to 75 days in advance of your renewal date.
Right.
So we should be able to start looking at this early October.
Right.
So
Not
what
very
does, what does moving to UHC look like for the employee?
So they'll get a new ID card in the mail. Once they do get a new ID card, you'll want to use that for, to give to any of your providers that you're currently in care with, as well as use that for your pharmacy benefit. Change any medications that you're currently getting mail order, as you noted. So any of that stuff will need to be changed as well for your provider.
Is there anything that's gonna have to be done like right now to switch? Is there, or will they just-
Only if there is a surgery or anything that's
No,
scheduled.
no, like paperwork for like, if
Oh,
we
yeah.
decide to go with UHC, what, do we have to do all the paperwork?
There'll be paperwork with the city, yeah.
Like
But
the
Open
employees?
enrollment time, like what will open enrollment look like for them?
So we'll get the benefit booklets, just like you're used to today. We'll get those updated and get those out to the employees. We'll walk through the benefits and then work with you on the implementation to United Health.
But they're not gonna have to fill out new applications or anything like
No,
that?
all that's already been done on the census.
Okay, that's what I thought, but I just wanted to make
Yeah,
sure.
no, totally.
So,
Most of the work is internal on Tricia.
Correct.
Correct.
As opposed to external on
That is correct,
employees.
yes.
And actually, you can do all of that prior to it actually passing on council, as long as we have a recommendation here. Follow the paperwork up front.
Oh, yeah, we could already be working on
We
some of
could-
those things behind the scenes
Yeah.
as we're doing it.
Right.
Yes,
That
totally.
way we would gain some time so that we would be ready on December 2nd, so.
I mean, the biggest thing will be getting info to Paylocity and getting that whole.
Correct. That, to me, that's probably, you're right, that's probably more of the,
The implementation for Paylocity is pretty minimal, so, yeah.
Second
And
que-
Paylocity is actually going to give us a discount too.
That is correct. So the second, third, fourth month, they are waiving the admin fee. So their initial quote came in at like $2,900, $2,975, I think it was. And with the second, third, and fourth months waiving that admin fee, it goes down to $2,200, which the city is paying today $5,600, give or take a couple bucks. But yeah, so there's savings there going to Paylocity as well for the city.
So I think the question is, do you guys need time to go over this with your teams, your staff?
I really don't see why. I mean, we're not entertaining Blue Cross. It sounds like it's the best option. So.
And what if I said no?
If you said no, you don't want to review them. No,
Well, I want to go with 5.
Are you guys wanting time to review this with them so that they're comfortable before? a
If the
motion
city
is made?
honestly is saying they don't want to eat the cost of the option 2 plan, and that's for lack of a better, I'm not saying that in a negative light at all, but because it does cost the city more, if you're telling us we would rather see a $276 a year increase on my family that I'm paying, that's what I come to, using it, that's the one we go with. I don't need to go back and tell them, hey, we had an option that will save you a little bit of money each year, or this year particularly, but it's going to cost the city more money, and they're not going to. I mean, if you guys aren't going to accept that plan anyway,
We would prefer not to, just because there's an increase to the city on any of these plans. There's also an increase to the employees. We're looking at this from the standpoint of if there are larger claims, the downside potential on option 2 could be really big for the city.
sure.
It could far outweigh where 5 is. So that's why we're looking at 5 is it's more of a known certainty or known factor for that increase that's steady, and as opposed to fluctuating and not knowing if there's
The
going to be.
exposure on 2 is just simply unknown.
Correct.
In your experiences with clients similar to us, if there is such a thing, going from Blue Cross to where we're gonna head. The following year, I mean, I know you can't forecast, hey, if we eat a 6 this year, do we have more leverage next year to say, hey, look, we came to you guys, we took a small increase to come here, we showed that we were, I mean, does that gives you some leverage, you think, for next year? Or is there a advantage to saying, look, or no, that just totally depends on the next year's usage and you can't look
So
out
I
that
think
far?
every group, every year should expect at least a trend increase. And that typically.
And that was what, 9%?
10 to 12%.
10 to 12.
Yeah.
And also,
And that's even running, if you're running at expected. Expected would be 80%.
and the other reason why I like option 5 is something that is what Dan said, which is what I had whispered to Sarah before Dan said it. If next year they come back with an increase, like, we would at least have an option that might be viable in option 2 then,
Good point.
instead, whereas if we jump to that now
Yeah.
and then
Right.
the increase comes, it could even be harder. So,
You also think about the transition for your guys. Okay, I will say that option 5 is going to keep it very similar, especially at the fact that we're going to kind of change them up a little bit on the with Paylocity, with the HRA. I could see, we really working through the HRA and then also having to work through the benefit really being different potentially on the out of pocket. Maybe one of those steps at a time might even be a good scenario going into the new year. Keeping your benefit looking very similar and then just dealing with the HRA kind
Is the city
of adjustment.
willing to give guys time when this goes through and say the first time someone has a doctor's appointment that they have to try to figure out that EOB or I mean, can that be like, hey, I got in to work on Monday, Jared, I need to take a hot second and call because they all work the same hours we do and try to figure some of it out? I mean, is that
I mean, I don't have a problem
doable?
with somebody coming to us for that education to figure out how to do it. I think that's.
Because I just know there'll be a small transition period.
Yeah.
And
Yeah, I could even
if
see
we
doing
could set
something where-
some of that.
Maybe the middle of a month or at the end of the first month, maybe we come out and some people want to come and we kind of walk them through and work through it together. Have the Paylocity rep out here helping us with that stuff. I mean, that's the whole
I
point.
just know when we talk to a bunch of these, they work that 8 to 4:30. We do, and it's like if you don't have time to do it on a weekend or figure it out after hours, so it may eat some time. But
Yeah, when we-
Steve, if it's not every time we're submitting an EOB though. Hey, I need an hour.
you'll submit it to us.
I see on here it says the amount you pay is based on where the covered health care service is provided.
Correct. So, for example, if you go to a facility, hospital-based, it bills under a hospital, that would go towards deductible co-insurance. If you go to a doctor's office, it could be just the copay if there's a copay associated with that. It's all paid on how it's billed.
Same way with, like, say you have your blood work done at Mercy
Right.
versus having it done at Quest. Very two different places services, so that they handle the claim differently. The discounts could be different from a hospital versus a Quest or a LabCorp.
Discounting, yeah, I see what you mean now. How when they turn that into
Correct.
Yeah, okay.
And that's one of the things where a lot of times when you have a consumer-driven type of product, the more you know where you can go to maybe have a little less of it coming out of pocket. That's just as a benefit for not just yourself, but
Well, I just see it on here, and it's like pregnancy. It says that for pregnancy, but then it also says it for telehealth. And I'm like, what the hell? Those are really two different things. But okay, I got it.
In general,
yes, sir.
in general, I keep hearing with the government going back into operation.
Yes, sir.
It was shut down for what, 40 days or whatever. I keep hearing part of it was because the current people in power wanted to knock off this supplement or whatever they were paying insurance companies under Obamacare. Is that why the rates are going up 25%, such a large amount?
So in
Does that
terms,
have anything to do with it, with what the federal government was supplementing the insurance company?
I would say on a group basis, not as much. On an individual basis is where that's really been the effect. Okay, that the Affordable Care Act and the guaranteed issue coverage and the subsidies is an individual process, and that's really where that affects. The group hasn't really felt that. in terms of what happened.
I've had a couple people ask me that.
No, that's a fair question. They're fairly separate. That's more of an individual problem for me, unfortunately, as a group.
Okay, thank you.
I think we could make it make sense to them. You know, we can explain it to them, and there's going to be a little more legwork. So.
And you will also tell them that you guys are willing to
Totally are.
get us a.
This is not a scenario where it's a set it and forget it.
Right.
This is where, we get something and, that's the whole reason why I've enjoyed working with Trish over the years. I mean, I'm more of a face-to-face kind of guy anyway. So the more that we can make that happen, the better.
And I mean, you did give us a koozie, though. Or what you call that? Koozie. We hung it. We called it the koozie. Yeah.
If you guys are good, then
Yeah.
we'd like to get a motion so that we can get it approved, and we can get it
We
on
said that
December
goal,
1st,
I mean,
and we can start that process sooner rather than
Well, it's
later.
I was just talking to
either
Scott.
a-
It's like, I think
It's either a 14% raise or
and take a look there. I mean, that 14%, those numbers are extreme. So,
Took out the chocolate.
Well, it's a
Still
14% edge too, just so you know, we wouldn't be following with the.
Ping pong.
No, it's fine. I didn't expect it to take quite as long.
Oh, I mean, you would still stay.
Well, I mean, you would, but then the city would have to do a lot to keep you there. Just so you know.
Any other thoughts or comments?
I don't think that's fair across the board. I mean, well,
Roll, Steve, Scott? All good?
Yeah.
If so, we'll entertain a motion to move forward with UHC as our provider in 2026 under option 5 that was provided.
So made. I'll make that
Made by
motion.
Joel, second.
Well, second, yeah.
Second by Jim Grantham. All in favor, signify by saying aye.
Aye.
Opposed? Perfect. Any other, item number 3, any other comments?
EOBs can be difficult, but they're sure nice to have an HRA when you have a baby. I had those whenever I had all my kids. Now I don't have that luxury. So it was a lot more expensive. to
yeah,
have
well, whenever
kids.
we had Coventry, it cost you about $5 to have a baby.
it honestly cost me $10.
All right, that's it. And,
Motion to adjourn.
Anybody else? Motion to adjourn? Second. Joel? Kyle? Meeting adjourned 4:03. Thank you all. Appreciate your time.